Let's give it up for Mark, put on this incredible event here. And it's not easy to do. I've put on a few conferences and events myself, and I tell you, it takes a lot of work to not only put it all together, but bring everybody out to it. And it's such a new, exciting industry that I feel like we got to do more of them. I can't believe this is one of the first capital-specific conferences in all of Germany. But here we are today, so thank you guys for coming. As Mark said, I'm Danny Brody, one of the VPs or vice presidents of the Green Organic Dutchman, and I've been with the company since we had a new management team come in 2016, and I'm part of the finance team that took us from 50 cents up to our recent traded highs about $10, and we're sitting around $5 right now on the TSX in Canada. So one of the things that really excites me about doing this presentation in particular is when we got started with the Dutchman, we set out to raise money a bit of a different way, and that was with a complete retail focus. So what we did is we started our first financing at 50 cents a share, and we reached out to every single person we knew in Germany, of course, along with the rest of the world, but Germany as well. And we said, look, this is what we're trying to do. We said no to the institutional investors at first, and I'll come back to that, but we wanted to welcome retail investors into our company at a seed level. So not many other companies went out with that approach, but we thought we would try something a little bit different. It comes to make sense for our marketing strategy. It comes to make sense for our patients. All of these retail investors could become patients of the medical market, customers of the recreational market, brand ambassadors. So we said, hey, what the heck, let's try it, let's see how it goes. And we reached out to everyone that we knew in Germany. We ended up having over 600 German investors come into some of our very first financings. So it's a proud moment for me being able to put investors into our company at 50 cents a share when we're trading over $5 now. Pretty awesome. So with that said, I come from the finance side, so we had actually helped with two previous companies with their dollars, their capital raising, and their go public transactions. So we helped Organogram go public in 2014. A few of us worked with them on that company. I helped Emblem Cannabis go public in 2016. We raised about $75 million for them over the course of 9 months. And we learned an incredible amount about the entire cannabis business. We learned a lot of things that we can do differently, certain things that can be improved on, and that's what we started out with TGOD here. So you can see this was our early business plan. We knew we had to raise significant capital. It wasn't just dollars for the medical market, and that was one of the original problems in the early days as companies went out in 2013 and 14, and they wanted to raise $5 million or $10 million or $20 million, which was great for the medical market, but not nearly enough capital for the recreational market. So we knew we had to raise hundreds. We had to raise over $300 million to do what we wanted to do. We knew we had to have a high-quality organic product. That's one of our big differentiating factors, is being an organic cannabis company. We had to put a large focus to research and development. We've got one of the largest budgets towards R&D of any licensed producer, over $55 million in 2 years. Licensing agreements from the states, consumer packaged goods. At the end of the day, we feel that cannabis is an ingredient, and it's going to be used and packaged up into a higher multitude of higher margin products, all the way from the dried flower to oils to edibles and then beverages at the top, which I'll come back to, and then take it international. So all around the world. Canada's a great place to live, but it's by no means a great place to finish. And with 38 million people in Canada, I think that number speaks for itself. But you come to Europe, you've got 750 million people here, 88 million in Germany alone. So we wanted to take that international. So to date, we've raised $350 million. And last week, we just closed a $75 million bought deal at $6.85 a share, which takes our total dollars raised over $400 million now. We've got 170,000 kilograms of annual production completely funded. That is going to start coming online in Q1 of next year, and it ramps up all throughout the year. So by the end of next year, we're on track to be producing 170,000 kilograms. Proven management team. This is a team that's done it before, not only in cannabis, but areas that we feel cannabis is going. So consumer products, consumer packaged goods, the beverage industry, pharmaceuticals, all areas where cannabis is not necessarily today, but where we feel it's going tomorrow. Industry-leading construction and design. This is very important for us because when we started, it's still such a new industry, right? Nobody's built these companies to scale before. So when we got started, we knew we had to partner with different companies that at least have built to scale in different industries. They can then bring that expertise to work on this project with us. Strategic investor with Aurora Cannabis. Aurora's been an incredible partner for us to date. They've invested $78 million into our company. We've got a certified organic product and process. And again, it all comes down to how do you differentiate yourself? How do you stand out in the crowd? There's over 100 licensed producers now in Canada. We want it to be organic, and I'll touch on this going forward. Strategic beverage division. I'll elaborate on that as we go forward, and then licensing and international deals is a huge aspect of our business. Now, why organic? Well, at the end of the day, organic is, it's a brand in itself. If I took any one of you guys to the grocery store here in Germany, or if you came to Canada and we asked the grocer to take us to the organic section, they automatically know where they're going to take you. It's an internationally recognized brand in itself. And consumers today are, it's not the difference between two products, right? It's not product A or product B. It's an actual lifestyle choice. And consumers today are willing to pay a significant premium price for that lifestyle. In the cannabis industry, it's a 34% premium. So that makes all the business sense in the world for us right there, but we also have added demand. If you look at the recreational market, 43% of consumers prefer an organic product, and the medical market's even higher at 57%. So makes all the sense in the world for us. And I'll just touch on this, but Amazon's acquisition of Whole Foods, that was one of the biggest validators for us that organic is not only a growing trend, but it's here to stay. That was a $14 billion acquisition, which I think is incredible. I'm also looking forward to the day we can actually buy cannabis on Amazon. Might be an interesting future. Responsible and sustainable. This is everything that goes into our company, and it's in our title, it's in our name, the Green Organic Dutchman. We're building LEED certified facilities that are GMP compliant, and specifically GMP compliant so we can export to Europe. We have a number of strategic partners, and when I mentioned a few of the other cannabis companies that we had worked for, and again, it's getting better now because companies are starting to build out to scale, but it's still such a new industry that not a lot of these things have been done before. So we wanted to bring out partners that had done it before and had done it to scale in different industries. So Eaton, one of the largest power management companies in the world. We've got Leadcore helping on our construction and design. And of course, Larson Projects through Aurora has been an incredible help building out our facilities. And facilities, let's touch on this for a little bit here. So in Canada, technically there's 4 ways that you can grow cannabis. There's outdoor, which right now is not legal in Canada. There's indoor, there's a hybrid facility, and then there's a greenhouse. So what does each of those mean? Well, if you're growing in an indoor facility, you generally get a very high quality product because your environment is completely controlled. It's a sealed environment, but it's a high capex, high OpEx, high quality product. You can grow in a greenhouse, which is generally speaking low capex because it's a greenhouse. It's quicker, it's easier to build. You get a lower quality product, generally speaking, because you're venting to the outside atmosphere, the outside environment. If it's too hot inside and it's cold outside, you just open up the vents and cool it off. The problem with venting, though, is when you have these drastic temperature changes in Canada like we do, and you're continually switching from high to low, hot to cold, that switch generates what? Any takers? Humidity. And humidity leads to mold, which is one of the worst kept secrets. any product that has mold or powdery mildew on it sells for the lowest possible price, and not necessarily an area we want to be. So we came up with something in the middle, which is a hybrid facility. It's the best of both worlds for us because it's a medium capex. You've got a high quality product or a higher quality product and a lower capex. And what a hybrid facility is it's a completely sealed environment, so you can control your temperature, your heat, your humidity, everything you can control inside. You're not venting to the outside environment, but you have a glass roof. So we call it light-assisted growing. You get all the benefits of the natural sun. Strategically located. Now, when you live in the second largest country by landmass with one of the lowest populations, you're very spread out. So with 62% of the Canadian population in these two provinces, Ontario and Quebec, for us, it makes all the sense in the world to be located in these two provinces. If 6 out of 10 of your orders are being shipped from BC to Quebec, just think of your increased logistics, your increased cost, your slower delivery to patients. So that's an immediate benefit. The second benefit to this location is in any cannabis facility, your two largest costs are power and labor. So we can get around the labor cost by building to scale over 1 million square feet of facilities, which I'll touch on in a second here. But you can't get over that power cost. However, Quebec has the lowest cost of power in all of Canada, 5.1 cents per kilowatt hour. This is our main facility that we're building. This is in Valleyfield, Quebec. It's over 1 million square feet. 1 million square feet. That will produce just over 142,000 kilograms of premium organic cannabis per year. Now, one of the most unique things about this property is it's zoned for commercial and it's also zoned for industrial and agriculture. So we can have, think of it like the sort of the technology parks you see, the technology parks you see in Silicon Valley. We want to create one of the first cannabis agri-parks. So you can come for a tour of our facility, then you can come and actually buy the product on our site, but we want to take it one step further. We want to have companies that are innovators in the cannabis market come use our land, come use our license, come use our team and all of our expertise to build and manufacture their own products on our site. Pretty incredible stuff. The Hamilton facility that we're building is 150,000 square feet. This is just outside of Toronto for anybody that knows the Canadian landscape. I actually lived on this property for about a year when we got started with this company. There was a little farmhouse built in the 50s, and 7 of us from the company lived there full time while we were building this in the very early days. I'm glad we are beyond that now. This facility will grow approximately 14,000 kilograms per year. 14,000 kilograms. We've got our cultivation license in August 2016, our sales license for wholesale in August of 2017. We just got our medical sales license recently last week, and I'm excited. We are finally going to be launching to the medical markets come January. So we're inviting 200 select investors, early founders of our company, in to sample our first product. Then we're going to roll out the recreational strategy all throughout the year, ramping up. It's going to be exciting. We've worked pretty long to get to this point, and we're about to take it to the whole next level here. Now, when I say Canada's a great place to live, but it's not necessarily a great place to finish. We want to start. It's a great opportunity to start our companies there because of the federal legality. I mean, we just legalized cannabis recreationally last week. How incredible is that? I feel like let's get a round of applause going. That's exciting. We are the second country in the entire world to legalize cannabis. So for anyone that's thinking they've missed the boat on this or forgotten the opportunity, we are just getting started. And I can't tell you how exciting that is to be part of a company that's not only leading in Canada, But Canada, the country that's leading the world, first G20 country to legalize cannabis recreationally. Anyway, I get excited and ramble, so I'm going to just keep going. Jamaica, we purchased 49% in a Jamaican company. And again, it's Canada, we want to grow it, we want to start the companies there, we want to start the brand there, but we're not going to finish there. So the opportunities around the world. Jamaica is an incredible spot. It's the only country in the world that has an actual religion based off cannabis. Rastafarian religion. So Epican is one of the first vertically integrated companies. They've got a cultivation license, they've got a manufacturing license, they've got a distribution license for retail stores. And we just opened up our first dispensary there in July. We're opening up another 5 by the end of Q4 of this year. We'll be producing up to 14,000 kilograms there for export to global markets. And in Jamaica, it's an incredible place because A, you can also grow organically, but B, it costs you 21 cents a gram to produce. Hemp Poland. This is one of our largest acquisitions to date. We bought 100% interest in Hemp Poland. They are one of the top leading brands in Poland. They've launched another brand called Cannabis Gold. They're now selling in 700 stores in 13 countries across Europe now. So when Mark mentioned that Germany is a gateway to Europe, that is 100% right in the sense that we can start with legalized hemp CBD in all these different countries. Hemp is legal 90% of Europe. So we start with that, and as we get medical markets coming in, as we get recreational markets hopefully in the future coming in, this is a complete gateway to all of Europe for us. And like I said, they're already selling in 13 countries right now. They're on track to reach 32 million US, 44 million Canadian EBITDA by 21. Incredible. This is our build-out timeline. We're looking to grow up to 195,000 kilograms if you include our Danish partner, or 170,000 kilograms without them. But all by the end of next year will be online. And I just want to point something out here. For those who are new to the industry, these numbers might not have any context, but let's take the average sale price of, say, $8. I mean, we could use $11 per organic gram, but a lot of that's going to be wholesale too. So let's take the average $8. You add 170,000 kilograms times by 1,000 to go from kilograms to grams, right? You times that by 8. That's almost $1.5 billion in annual revenue. Big numbers. Okay, R&D, like I said, we've got one of the largest budgets of any licensed producer towards R&D, up to $55 million for the next 2 years, but cultivation, clinical trials, product development, all these things go into the big picture. And because cannabis has been illegal for so many years, we haven't been able to do that research and development and come up with different novel products and come up with the research to support some of the arguments that cannabis is in fact beneficial, but now we can, and that's exactly what we're going to do. Product development is huge for us, and I'm going to touch on beverages in a second here. But we've got one of the best science teams to support all of this. The entire research and development budget. Prem Vermani basically invented white labeling for cola companies. He's white labeled a number you can see on there: Publix, Wegmans and Safeway, Loblaws. He created the formulations and the science behind all of these drinks. So I'm going to come back to why that's important. But for us as a company, we feel that cannabis is an ingredient. It's a base ingredient that will be packaged up and sold. You can see it here, different higher margin products. So if you take your dried flower, you extract the oil from that flower, you can put it into all these different higher margin products, starting with pet health up to pharmaceutical, edibles, and then beverages at the top, because beverages has the largest global distribution out of any of them. And it's got the highest margin because you require the least amount of cannabis to go into it. This is our brand. You can see some of the photos here. And again, the future for us, where I think we're going to start to see mass scale adoption for the recreational market. Now quick show of hands. Has anyone in the room had an edible before? Okay, that's about half the room. So the biggest problem with the edible market is the fact that you can't measure it. It's not a sustainable or repeatable effect. Now, I know I've had one, and you don't know if it's going to hit you in 30 minutes. You don't know if it's going to hit you in an hour and a half. You don't know how long it's going to last. You don't know if it's going to completely put you to sleep or what it's going to do. So that's problem number one. Problem number two is the taste, the smell. People, generally speaking, do not like the taste of it. So how do we fix that? Well, I think one of the most important things here is when you're able to measure that onset and that peak and that offset, kind of like a glass of wine or a beer. When you can measure that pattern and eliminate the taste that is bitter and not many people like, or the smell, and have it repeatable, that is where I think we're going to start to get mass scale adoption of the recreational market. And that is exactly what we're working on with some of our partnerships and licensing deals. So let's look at this one right here, TGOD/Ripple SC. Ripple has invented one of the first patentable, they've got a patent pending on this, but it's a water-soluble cannabinoid. So you sprinkle it in your drink, it dissolves, it's not an oil. That's one of the big problems with cannabis, is to take it from a flower into an oil format. It doesn't hit the blood-brain barrier properly. It's not the same or effective way to make that happen. So when you start getting water solubility, it dissolves evenly throughout the drink, it dissolves evenly throughout the product, and it hits your body evenly, without any scent, without any taste. It's water soluble, there's no taste to it, and they've got a patent pending on it, which for us, that's just, that could be a game changer. I know Joel knows. Again, Canada's a great place to live, but 37 million people. Europe, we've got 750 million here. South America, Latin America, over 600 million. That's where we want to be. Those are the markets we want to take our company to. Again, with Aurora, we've got an incredible partnership with Aurora. They invested over $78 million into our company. They've got a 20% supply agreement. And one of the best things with our Aurora partnership is they've just gone and built Aurora Sky. They're building 800,000 square feet at the Edmonton airport. They just got they just got their sales license for Aurora Sky last week. So they've gone through that process. They can come and help us, work with us to create the exact same or very similar facility that we're building in Valleyfield. Comparables. We are the fourth largest for funded capacity. So we're building the fourth largest cannabis company as far as our production goes, but we've got the sixth largest market cap, so a bit of a discrepancy there. Now, I'm going to speed this up because it's already almost 11 here, but this is one of my favorite slides. Now, I get asked all the time about valuations, and one of the things I always say is I don't think we're even close to as high as we can go. Now, if you look at the top three market caps on the left-hand side here, top three market caps of some of the largest beverage alcohol companies, they equal over $500 billion. You look at the top three market caps of the pharmaceutical companies, well over $500 billion, probably closer to $1 trillion. Same with tobacco. That's, what is that, 400 million when you start adding that all up? 400 billion. Now, you look at the top six cannabis companies. Top six cannabis companies. What are we, 30 billion, 35 billion today? Maybe a little bit more with Tilray, but point being, we still have so much more to go. And that's for a market that's fairly similarly sized. If you look at beer in Canada, it's an $8 billion a year industry. You look at wine, $7 billion. You look at spirits, $5 billion. Cannabis with recreational legalized is looking at, pick a number, 8 billion, 10 billion. That's where all the estimates lie. So it's a similar market size, yet our valuations are down there compared to every single industry that we're disrupting. So food for thought. Management team, we've got an incredible team. Brian Athaide spent 25 years with Procter & Gamble. Again, these are guys that come from consumer products, come from consumer packaged goods. That's exactly where we're heading. And we've been hiring a team from consumer packaged goods for the last two and a half years now. Chubba spent 10 years with Cott, one of the largest beverage companies in the world. Julia was with Procter & Gamble as well. So our whole team comes from consumer products, which is, we've done this by design, because that's where we feel cannabis is going. Board of directors, a couple guys I want to point out here. Mark Bertrand built Mega Bloks. So I don't know if your kids might play with Lego. Mega Bloks is the main competitor to Lego. He built that company. It was a family business. He joined in 1985, built it to $500 million a year. They were doing $600 million a year in sales, and they sold it for $500 million to Mattel in 2014. But the interesting thing with Mark is he took that product to 175 different countries. Sounds kind of like what we're trying to do. Nick Curtin, he's the chairman of the Canadian Investor Protection Fund. That is an incredible director for us. Ian Wilms, Calgary policeman. Jeffrey Scott built a $3 billion oil and gas company. So we've got an incredible board of directors. On our share structure front, like I said, we've raised over $425 million now. But one of the most unique things was our retail-first approach. So we went out to the retail investors. We let retail come into our company at a seed level, 50 cents, $1.15, $1.65. Then we did our IPO at $3.65. We traded up to a high of $10.24, and we're sitting at between $5 and $6 right now. So anyone that got in early, I mean, that's an incredible win. One of the things I want to point out before I wrap up here is all founder shares. This one's very unusual because nobody ever does this, but all of our founder shares are escrowed for 42 months. Not 36 months, not 6 months, but 42 months. We wanted to make sure everybody had a completely aligned interest to investors. Now, just to wrap up, summarize, we're fully funded for all of our Canadian operations. Everything that we do now going forward is on the international front. So you can see our Jamaica partnership, you can see our Polish acquisition. We've got another partnership happening in Denmark right now, and we just announced a Mexico deal where we're going to do a 50-50 JV, joint venture, that gets us into almost 8,000 potential retailers. 8,000. So you combine that with what we have in Europe, where we almost have 10,000 points of sale, 10,000 across the world. Proven management team, industry-leading construction and design partners. Aurora, like I said, put in $78 million to our company. Organic is one of our big differentiators. Consumers prefer an organic product. Strategic beverage division, licensing, international expansion, and we're 100% committed to remaining organic. Now, one other thing I want to just touch on here is TGOD Acquisitions Corp. Hold on, Mark, how am I doing for time? Oh, I'm cruising. Okay. So TGOD Acquisitions is, we have, so TGOD is listed on the TSX, and the TSX does not allow companies to operate in certain jurisdictions around the world. So we are doing another company. We're starting at 50 cents a share, and this is going to be called TGOD Acquisitions to start. But it's a spin-out transaction in which investors in TGOD have the ability to buy shares. They get first crack at this new company at 50 cents a share. Now, there's no founder shares outstanding. There's no cheap insider stock. 50 cents, this is the first financing that's ever happened in the company. And there's literally one share outstanding, one share, and that was the share issued to incorporate the company. So I'm telling you this because nobody else does that. Nobody gives shareholders the first crack at financing a new company, but we are trying to do that. We are doing that, and it's at 50 cents a share. So anyway, that one I like, that's exciting, and we're going to try to follow a similar path to TGOD, which was a 50-cent round, $1.15, then an IPO a few months later at 2 to 3, or we'll see how it goes. But that's the plan. Thank you guys. You guys have been great.